All right. Well, thank you everyone for joining us. I see others joining us as we go. We'll get kickstarted with a few introductions and then jump right in. Today's topic will really be focused around driving business decisions, how to calculate the ROI of finance automation. A very exciting and germane topic, especially amongst finance teams today. So really excited to do a deep dive on this with my colleague and co-panelist Chris Wallace.
Hey everyone, excited about today.
Perfect. And so today we have a few different topics that we will cover. So first, we'll just start with a brief welcome and introduction to both Chris and myself, and then we'll dive into kind of the meat of the discussion, which will really be focused around an introduction to finance automation, some considerations around calculating ROI as firms are going through the automation process, key challenges, benefits, and opportunities. And at the end, we'll also invite each of the participants. Please feel free to send through Q&A through the chat. And excited to hear some of the questions that you have and answer some of those as we close things out. But to start, maybe just some brief introductions. So hello, my name is Djibrane Larrabure. I am CFO of Kolleno. I bring about 10 years of experience in strategy and finance. The last 2.5 have been here at Kolleno, helping companies to optimize their financial operations and accounts receivable processes. Today, I'm joined by my co-panelist, Chris Wallace. Chris, maybe I'll hand it over to you just for a brief introduction.
Thanks, Ron. I appreciate it. Yeah, hey everyone. I am a solution engineer with PayEm. So I have been on the solution engineering side, kind of the pre-sales side of the house for, gosh, about 6.5 years at this point, helping in a number of different fashions, like what Gibran was talking about, helping organizations as a subject matter expert and bridging the gap and how, softwares like PayEm can meet the needs of their initiatives over, drive efficiencies in their organization. And I did actually, in fact, spend nearly a decade prior to that as a practitioner in FP&A and financial reporting. So having spent a lot of time, in fact, in the shoes of a lot of these types of conversations that I have a lot of experience in, since, on the consultative side of the house for the last 6 years. So looking forward to bringing some of that expertise to, how we can, introduce new components, new factors into, calculating the ROI for these types of conversations. So thanks, Japan. I appreciate it.
Fantastic. Thanks, Chris. And so, maybe to kick us off, want to kind of level set on, what exactly is finance automation? Why is it important? I think this is definitely a topic that's top of mind for a number of different CFOs and finance teams, and especially as we're, having conversations with our colleagues and our clients. This is definitely top of mind for, finance teams across a number of different industries. And so taking a step back, when we look at finance automation, it really is about leveraging tech to digitize and simplify financial processes and operations. And typically what you see in the automation process is that, within the finance function, there are a number of, repetitive tasks that are done manually by finance teams. And so it's how can we kind of take a step back and kind of optimize our tasks, our workflows, improve our overall, efficiency and accuracy, and utilize technology to our advantage to improve and enhance our financial operations. And so what you'll typically see is a number of different applications across organizations that really range, the gamut across the finance function. There's a number of organizations that are working through, automating their invoice to cash process to improve the efficiency of that. Expense management internally, especially with employees, and how do we kind of use automation to optimize and simplify those processes. Procure to pay, financial planning and analysis, which I know, Chris, you've got some great background in as well, and we'll be touching on as we go. Payments and reconciliation and financial close. And so, taking a step back, it's how do we use technology to really help us to streamline, enhance, and optimize all of the various processes and workflows that we have within the finance team, so that members of our team can really focus on the higher value add activities that finance has across the organization. So if we take a look at, finance automation in practice, what does that typically look like? So, one example that we pointed to is the invoice to cash process, right? So at a very kind of basic level, it's, issuing the invoice. We know when the invoice is due, having our team send, manual reminders, following up on any overdue collections, and then, once payment is received, going through the reconciliation process. And I think in times previous, there were a number of different challenges, within this, and a number of different challenges that, as we speak to clients and other members of the finance teams that are still going through the automation process, they'll talk us through some of these kind of key elements. The first is really around the invoice issuance. So, in legacy processes, this was typically done kind of manually, very much decentralized and paper based. So it opened up, a number of opportunities for, for example, human error, opportunity to lose an invoice, or difficulties really in tracking invoices as they were coming in, for either on paper, on email, on fax, various different formats. And so, right at the start, you saw a number of different challenges in terms of that process. And then as you go through, as teams were going through and trying to really manage that invoice to cash kind of workflow and those different tasks, it was oftentimes having members of the finance team pick up the phone, send calls, send reminders, and it was really time consuming, right? Going through and manually chasing these overdue payments, often missing tasks, and really resulting in a higher risk of write-offs as you're doing all of this process manually. And then, payment and reconciliation, I think certainly reconciliation, a key priority and a key pain point for many, especially in kind of non-digital formats. And so, I think previously, having the non-digital payment methods such as checks really requiring a lot more time, adding a lot more friction to the payment process, making it more time consuming and error prone. And so, taking a step back, what we do here at Kolleno is we'll often have conversations with our clients to really understand, which of those pain points are really impacting, their organizations, and thinking through how the automation process can help them. And, one thing that we often hear from on the invoice to cash end is, automation helps to really streamline this process and enhance it for a number of different organizations. And so what does it enable, right? From the automation process, what you can often see is the digitization of the invoicing process. So being able to take invoices, have them done digitally, sent out to their clients, which enables a lot more accuracy and centralization, especially if you have a key ERP or accounting system, like NetSuite, QuickBooks, etc. Being able to digitize those invoices, have them there, and then push them onto your ERP and accounting systems. And then I think that the digitization also, or the automation process also allows, kind of a clearer tracking of tasks and workflows, right? The ability to actually go through, set out which tasks you have, put in workflows to automatically send kind of more personalized and multi-channel reminders, whether it's SMS, phone, email, and just help to enable kind of greater accuracy and fewer late payments. And then, I think at the tail end of the process, really the ability to offer digital payments, which helps to remove a lot of the frictions that our clients typically have, right, in terms of, being there, or their clients being able to make payments, and enabling kind of more options to fit personal circumstance and simplify the accuracy, the simplicity of the payment process and the accuracy of the reconciliation process. And so, as we go through, we'll talk through a number of the different benefits that automation in general enables. But oftentimes, what you'll see is, going from the manual processes to automation, is oftentimes you'll hear, a lot of number of hours saved, a lot of both tangible and intangible benefits, whether it's cost savings, through to, time saved, ability to focus on higher value add activities, improved decision making, all of those key elements. So there's a lot of opportunity within finance automation, and we'll talk through in more detail as we go through. But I think a key question for a number of different organizations is, taking a step back as we go through this process. How do we actually understand, how we can derive the actual ROI, get an understanding of how it's going to benefit our organization, and calculate the return for our organization through these investments. And so, Chris, maybe I'll hand it over here to you to talk through a little bit about the ROI components and some of the key elements within it.
Yeah, I'd love to. This is actually, an interesting topic because in the countless conversations that I've had with a lot of customers, right, it's very frequent that I come across a lot of folks, a lot of organizations that really haven't gone through, an ROI calculation per se, and I think that it's really important. I work with a lot of small and medium businesses, and I've even helped, our organization build their ROI calculation. So I think it's important to spend a little bit of time on this, the components that need to be analyzed and understood when calculating an ROI. And so, obviously there are a handful of components that we'll talk about here on the screen. Of course, the easiest one, the initial investment, right? It's very easy to get kind of super focused on the cost of the specific software or investment in question, but it's very important to also note that there are additional costs that need to be factored in. I mean, consumption of additional resources might, possibly bringing in, like the IT department to help work with possibly an integration, even talking about additional training. I mean, I've even seen where, you're running two systems in parallel. So all of these are, additional, costs to factor into these calculations when conducting an ROI. And even whenever we're kind of moving on to the returns, the benefits of the ROIs, this is, or excuse me, of the softwares, this is obviously where, like Djibrane was talking about, we can get into a lot of the tangible and the ever cumbersome intangible benefits that we receive by a lot of these types of efficiencies. Obviously driving scalability. This is, in a more short-term type of scenario, could be possibly eliminating another software, eliminating redundancies, consolidating tools. So aside from just the time savings and allocating, a salary rate to that, for example, there are a lot of additional returns that we can start to factor in. And I think it's also important to think of a time frame in which we want to calculate this ROI. Obviously, the first assumption is, what, we should do an ROI for the life of this contract. That's a little bit more of a short-term view, taking into account, all right, we've implemented this. What are some of the short-term benefits that we can gain? Like I said, maybe eliminating another software, consolidating some of those. But I stress that it's very important to take into account the long-term benefits, further on, additional above and beyond whatever maybe year contract, 2-3 year contract it might provide, in allowing for us to reallocate resources to other initiatives or reallocate resources to another type of a process in the organization. And so, it's really important to start to define the different components here. And like I alluded to earlier, the intangible benefits being really one of the most difficult parts of an ROI. I mean, how do you put a price on, making it home in time for dinner during close, right? I mean, I don't know how you can put a price on that, but there's a lot of different components that we see here, reduce risk of error, increased accuracy, even employee satisfaction, right? And so there's a snowball effect to a lot of these intangible benefits, doubling down on the employee satisfaction. I can say from experience that, while I was able to, increase my employee satisfaction as an individual contributor, it also can save the organization, from recruitment activities, having to, hire new individuals and train new individuals. If the employee satisfaction is low, we have high employee turnover. So there's a lot of those types of factors that we can also factor into, calculating return on our investment when it comes to implementing these efficiencies.
Yeah, Chris, and I think the time frame one and the intangible benefits ones are really interesting because putting on the finance hat, we typically think about the investments and returns and how we kind of focus on the numbers around that. The one thing I often say is we're having these conversations on the automation piece with our clients is to really think of automation as a bit of a journey,
Mhm.
as you're going through, really taking a step back, trying to clearly articulate and understand, what's our vision, what's the desired outcome, how can we go about it, what are the steps, and then really thinking about it, not just in the short term, as you said, but really in the medium and long term, right? Where is it that you want to go? Because oftentimes I feel like the assumption is, let's jump in and we'll automatically see all the benefits come through it. But sometimes it takes a little bit of time, and there's some unforeseen benefits that come in, and other elements that come in as you go through as well.
Absolutely.
And then the intangibles, I think that one is key as well. I think the accuracy component, the human error, those kind of key pieces, I think those are often pain points, and very costly pain points in
Mhm.
some instances. And so I think being able to factor those in are key. Um, how do you kind of engage when you're having conversations with clients and other finance teams that are going through that? How do you kind of talk to them a little bit about the time frame and the intangibles and things like that, as they're thinking through, how do we kind of map this out? How do we kind of do that as part of our ROI estimate?
Yeah, I think that's part of the personal aspect of the role, and the personal, aspect of the jobs that we do day in and day out, is kind of understanding the individual and understanding each part of that process. And that's where, having a very valuable, discovery with, obviously your account executive, and someone like me, a solution engineer that is in fact actually sat in the shoes of a lot of these types of processes, that can really not just empathize, but can sympathize with exactly what it is that they're going through. And so I think having a lot of those thought-provoking questions, just a good dialogue to uncover, what it is that their required capabilities are, and how they tie in fact to, maybe we've had a material misstatement in the past. I mean, that's a four-letter word, right? And so we don't want that. But whenever we start to have increased accuracy, that starts to alleviate those potential problems, that can become extremely severe. And so I think it's really important to start to, uncover a lot of those components as early as possible, because then we can ensure that we can align our capabilities and our solution to the required capabilities that that specific team organization would need out of a software implementation.
Yeah, I couldn't agree more. I think oftentimes what we see is, a number of the most successful efforts really do kind of invest that upfront, getting all the team members all together, really trying to understand, where we're trying to go, what the outcomes are, who we need to involve, and then trying to kind of build out from there. I think that upfront time frame and that upfront investment is really key.
Mhm.
And I think one other element that I would also add to that is really around some of the metrics, right? I think as a number of teams go through, and especially us being in the finance function, we'll typically think from an analytical perspective in terms of like how do we actually create the models and things like that to actually estimate the return on investment. But one thing I also emphasize is once you've actually created that, one way to effectively kind of keep track of the progress and how things are kind of evolving from a return perspective is really to develop a core set of KPIs that you want to focus on. In the typical kind of four buckets that we often point to are really around first, of course, financial health. Top of mind, really focusing on total amount saved from these efforts, day sales and payables outstanding, time frame, payback period, and things like that. But also taking a step back and focusing on a few other kind of key, KPIs or metrics. Things like efficiency and productivity, which is key. Trying to take a look at how automation is helping your team, taking away some of these like, kind of lower end tasks and allowing you to focus on higher value and create more value both within the organization and for your clients. Quality and compliance, and I think client and employee satisfaction. And this one is very much an interesting one. I think as part of the shifting role, I would say of the finance team, I would say is a lot of different teams are becoming more and more client facing, right, and involved with the clients sitting on calls with sales and marketing and things like that. And so being able to really take that as a measure of the overall benefits of the automation program and how it's helping your organization. And so some of the typical KPIs that we'll often see from an efficiency and productivity perspective. Chris, you touched on this earlier around error rate reduction, the total number of hours saved from automation, and of course AR and AP turnover. So really focusing on these as potential efficiency and productivity measures. And then on the other side, the quality and compliance element. I think taking a look at how automation helps improve regulatory compliance and keeping track of regulatory compliance rates, reductions in reporting errors, and a key area across all organizations really around data security. I think another key measure how automation can really help protect data security and ensure data security within the organization. And then, as I said before, around client and employee satisfaction, we'll see a number of our clients and other organizations as they're going through, the automation process, really focusing both on the client and employee perspective, right? The internal and the external. And, some of the key measures that, you're looking at there is really around the Net Promoter Score, right? Through your automation efforts, are you able to expedite and improve services that will ultimately help out external facing clients that may have questions around payments, etc. And then internally taking a look at the automation rate, around like adoption, the speed of the actual automation process, and then employee satisfaction, right? As you're going through the automation process, as we'll touch on later on, there really is a lot of change within an organization that's happening, right? A number of different team members need to be involved in this process across divisions, across the different levels of the organization. And so as you're going through, really keeping track of how this is impacting your actual employees and how they're actually adopting automation as they go through, and how they're benefiting from it, and being able to track those kind of key pieces. So I think these are definitely some key components. I don't know, Chris, if there's other things that in your conversations with clients and things like that they're also looking at when they're trying to kind of monitor the progress of their automation efforts.
Yeah, honestly, I think one of the main points I like to bring up here is a lot of times in these initial conversations, there's going to be new metrics, new KPIs that you're going to deem and understand to be beneficial that you weren't necessarily tracking before these conversations arose. And I think that it's extremely important that, a CFO of one of our customers said it, and it just stuck in my brain. You can't report on something unless you track it, right? So if it's a new metric, we need to start making sure that we track it so that we can, a quarter down the road, 6 months, a year, start to have that data to be able to analyze it, and then further have proof points that the automation was in fact accurate. But even like the employee satisfaction. I've had a lot of customers that were just burnt out on having so many systems, for example, right? So I've seen where they'll consolidate those and leverage an all-in-one kind of tool scenario. So just hearing the needs of the organization and meeting the needs in that way too. All of those, every organization is like a fingerprint. They're all going to have their own requirements and initiatives. So I think making sure that once you uncover what it is that you need and your requirements and your KPIs, that you can certainly track those as proof points as you move forward.
Yeah, couldn't agree more. And taking a step back, I think we've talked through some of the key elements as we're going through and calculating ROI, some of the common KPIs as we're going through. And I think that really begs the question, as you're going through this process, as you're trying to put these kind of estimates and KPIs together, what are some good kind of tools and resources that firms can use to really help them as they're trying to navigate this?
Absolutely, yeah. And so this is exactly going back on, working with a lot of those prospects that have never really gone through this exercise before. Having experience in my past building a value management team at one of my previous employers, right? So empowering, internally and externally, everyone with the necessary tools that they could potentially leverage to ensure the accuracy, stress test the numbers that we're seeing, et cetera. And first and foremost, right, I really think that it's extremely important to leverage your account executive, right? I kind of chuckled when I wrote this, right? The trust but verify scenario. All AEs have a little bit of a negative connotation from time to time, but I think that they are in fact change agents, right? They have an extremely large sample size of working with a number of different organizations and realizing, all the pains and issues and inefficiencies that customers are seeing across the industries, multiple industries, and how they're remedying those, right? So I think it's extremely important to leverage that experience, and even individuals like myself, solution engineer, right? Those are always really good, unbiased, I should say, resources that can bring a day in the life experience to a lot of these, and bring real world examples and benefits. So I think taking into account some of those, account executives, solution engineers, and even kind of taking a step further with a little bit more competitive analysis, right? Starting to stack rank them against their competition, their competitors, and start to figure what kind of ballpark that we are actually playing in as it relates to the returns and the metrics that we're seeing, against the competition, for example. So this is where, you can start to make adjustments on, what we're seeing as it relates to, this X company's benefits that their customers are seeing versus Y, customer benefits, et cetera. And even potentially having, a referral conversation with an existing customer to then, stress test a little bit of the numbers and validate, in fact, the numbers and the benefits that maybe that account executive might have already presented in a prior conversation. And I think kind of doubling down on some of those KPIs and those metrics that we were talking about earlier in the data analytics side of the house. This is where, once we uncover certain metrics that we deem as important, that we want to, use as internal selling points, that we need to actually remedy to, for an internal initiative, et cetera, we need to start tracking those so that we can leverage those data analytics softwares. I mean, I've seen all under the sun: BI, Power BI, Tableau, data visualization softwares that will empower you to, understand how we're performing with this new software. I'd say this is a little bit more post-mortem. I hate using that word; it's a little morbid, but kind of after the implementation, so that we can start to build those proof points and see the benefits of our hard work and our initiatives. And of course, leveraging industry reports out there. There's tons of publications, tons of companies out there, like the G2s of the world. I recently came across a new one, IOFM, Industry of Finance and Management. Really good metrics out there that kind of give insights into what the average cost of processing an invoice is with and without automation. So you can start to leverage a lot of that data that's out there as well, to then again build and do your due diligence around the entire ROI atmosphere here, and so that we can start to build a more clearer picture once we're combining all of these different perspectives from the account executive, the SE, competitive analytics, and referral conversations, et cetera, to now provide a more concrete realization of what it is that we can calculate through implementing a new software or finance automation.
And it's interesting, Chris, when you mentioned the post-mortem piece, it got me thinking. Actually had a conversation with another CFOs going through a process who said, we actually did a pre-mortem. And so what they did is sit down with their team, and they actually went through the process and said, okay, so this is what we want to achieve, right? If it were to fail, right, what would be some of the key elements, right? What would be kind of some of the key barriers? And they actually wrote down, it would be this, that. And as they kind of went through that process, they basically came up with a list of, items to plan for, contingencies, things like that they hadn't even thought about. So, I think the post-mortem piece had me thinking about that.
Well, I love that too. That's actually a good component, because you have to have a baseline to compare against. And if you haven't really documented the pre-mortem, then you don't really know how much benefit we're receiving, after we possibly implement something, right? So I think that's a really powerful point, that there's a lot of benefits that can come from more or less of a workshop of kind of, we used to do whiteboarding, where we would, whiteboard a process out in its current state, the time frame, et cetera, so that we had a baseline to work from. And I even think that it's powerful not only for, the individuals that are completing these processes, but even for upper level management, right? I've had a lot of experience where, a CFO or a VP might not necessarily be as in tune with exactly how much time a certain task might take, for example, right? So when we bring all these folks together, this is where we start to have this realization up and down the chain of really where some problem areas might reside that others might not have been aware of. So again, just creating a really good baseline for what that current state looks like so that we have something to compare against in our future state.
Yeah. I couldn't agree more. And I think that, oftentimes what you'll find is the number of different organizations that either go through the process, kind of take a look back and a lot of things that I'll hear from those clients is, we kind of wish we had taken a little more time at the beginning to really think this
Mhm.
through, done a pre-mortem. And I think one key element, that we'll all talk a little bit about is around the data, right? I think oftentimes, a number of different organizations will be, keen to jump in. We're all keen to jump in on the latest, AI and tech and things like that. But it's really taking a step back to get an understanding of, where is it that you want to go and what does our data look like going in there, right? Making
Mhm.
sure that you've gone through, that the data is accurate, that it's cleaned up, that it's ready, because that's going to be the biggest, source as you go through and you go through the automation and the various integrations and you're going through that process, just making sure that you have the right information and the right tools to give you the what you need as you close out. And I think that ties out to, some of the different challenges, right? So, oftentimes, I think as you're looking through and reading through case studies and all of these elements, you get to read all of the successes of the finance automation kind of programs. There'll be an interview with a CFO or a finance director and a discussion with them about, how it's resulted in huge ROI and how it's benefited their organization. But the great element is, you have a coffee chat with them. They'll talk through some of the pain points and some of the elements that they wish they had, kind of done as they go through. And so, some of the key pieces that we've documented, from those conversations, touch on, three, and there's actually more things, but I think really kind of three key challenges that we've at least seen. I think the first goes back to that point, really about taking the time up front. I think oftentimes, when we've had conversations with our clients who've had successful automation programs or who've, had certain automation programs that haven't necessarily resulted in what they were initially expecting, I think the feedback that we often get is, we wish we had taken a little more time at the beginning to really set a clear vision of what it is that we wanted to achieve and the desired outcomes of what it is that we wanted to get to, right? Because I think with that would have helped through the planning process and getting us, from point A to point B kind of more effectively, more efficiently. I think the second element is really around getting people galvanized and supporting this. Chris, you just talked about leadership, right? And I think it's really getting your leaders to really support this, not just within the finance team, but across the organization. Because if you're talking about expense management or other elements within the organization, it's going to cut across your sales, marketing, and other teams. So really getting your leadership galvanized and supporting this, but also everyone within the team, right, all the way down to like frontline workers and everyone across the organization, vertically and horizontally, who are going to be impacted, getting them to really support the actual effort, so that you can improve your chances of success and enhance adoption and really get a lot of the good input that you're going to need, about how to make it most successful. I think the third kind of key element that we often hear is around planning, right? Which I think links back to the first and second point. It really is around, as we went through the process, we didn't really anticipate these costs. We didn't really anticipate, these additional elements. We didn't really anticipate that we would need, to enhance our tech stack in different ways than initially planned. So I think, really taking the time up front to understand, how do we get from point A to point B? What are some of the different elements that might come in? What are some different scenarios? And really planning for some contingencies to support that implementation. So, and I know, Chris, you've probably heard a few others from your clients as well in some conversations you're having.
Absolutely, yeah. And so this actually really is a good segue into some of the talking points that we have on, just some additional challenges and kind of stack ranking those. But, it's like any project, kind of going back to what we were talking about earlier, having a clear baseline, having a clear vision with quantifiable metrics so that we have something to attain and something to drive towards. I think having that clear vision, that clear direction is extremely important. And one thing that we also do on the leadership side of the house is we try to ensure that when we're communicating with stakeholders in an organization, to not only have an internal champion that is kind of the change agent internally, but also having like an executive sponsor, right? And so by having some of those executive sponsors, it really ensures that we're meeting the needs of everyone in the organization, like Djibrane was talking about, bringing all the necessary stakeholders together, more or less a round table type of scenario, so that we are all meeting the needs, and no one's left out too. On a planning standpoint, when we start to get into a lot of these, finance automation conversations, and Djibrane said it, the tech stack, introducing IT into these conversations, or our system admins, et cetera, to make sure that they are introduced as early as possible, because they need it to confirm or deny that the necessary requirements can be met with an integration, for example. So I think having those conversations as early and upfront as possible really can alleviate a lot of these challenges that we can possibly experience in these conversations on the pre-sale side.
Yeah. And I think it also avoids kind of what I call like patch automation. It's where you're really focusing in on like one piece, right? We're going to automate
Right.
this element, but then, 2, 3 years down the line, you realize that you need, a number of different elements, and you have a number of different needs that have just been unmet. So really taking the time to sit through, and as you said, bring in the people from your tech team and other teams to really understand, okay, if this is how we're going, how is it ultimately going to affect our tech stack? And in the future, what's that going to look like, right? I think that's key. I think the people element, I think that's probably the biggest challenge, right? We can focus on strategy, we can focus on execution and everything like that, but I think the key and central to that is really getting people galvanized, getting support around that. And I know, Chris, you've talked a lot about this, and I know you guys have really focused in on this with the executive sponsors and things like that. Can you talk us a little bit through around that element, and how you kind of work through with your clients and others around that change management piece?
Yeah, for sure. And this pyramid here is kind of, I tried to prioritize some of the challenges in severity, right? Obviously, change management being one of the largest that we experience, in any organization whenever it comes to implementing something new. There's going to be plenty of people that are used to the way that things are, that like the way that things are. And that's where it's extremely important, right? To build that champion internally, to be that champion, right? Because you are bringing the benefits to the table, and energizing the organization to be able to realize those benefits that can occur, right? It's funny. I used to use this slide. I stopped using it. I haven't used it in a while. But it was this caricature of two cavemen working really hard pulling a cart with like a square wheel on the cart. And there's this other caveman with this round wheel that says, "Hey guys, like there's something better out there. You want to see this?" And the other guys with the cart are like, "No, this is too hard. I don't have time to talk to you. We're working really hard," right? Right. So it's being that change agent with the round wheel to say, "Hey guys, just pause for a couple of minutes. Let me show you how cool this thing is, and watch how much faster your cart's going to go with a round wheel instead of a square wheel," right? So it's that team aspect of things. I have a really extensive football background. It's having that leader in the clubhouse that is willing to rally the troops, and I think that's extremely important to really leverage in these conversations. And certainly, as we said earlier, an executive sponsor is paramount as well, so that we can navigate the powers of the organization to ensure that budgetary scenarios are taken into account, that prioritization of these projects, et cetera, are very important. So that's definitely challenge number one. And then, kind of like I was talking about earlier with the data integration side of things, a lot of these softwares out there have really robust integrations, and inversely, a lot of these ERPs customized, very unique from company to company. So it's extremely important, and I stress this all the time, that if we fact gather in the beginning that integration is a required capability, we need to make sure that we get all the necessary parties involved, right? Because IT being one of those, because IT has their own priorities and they have their own challenges and they have their own direction and strategy. And we need to make sure that we fit within that whenever we're starting to talk about, integrating and bringing in new functionality to the tech stack. So it's always been extremely important to, again, have those conversations as early as possible, so that we can ensure that, that data integration, those financial systems can in fact play nicely, with our existing tech stack, et cetera, right? Now, of course, on the performance measurement side of things, this goes back into, gathering the necessary data that would be required to, analyze whether or not these are in fact profitable, we're getting our return on our investments, ensuring that the KPIs that we uncovered at early on in these conversations are in fact something that we can track and analyze and have that baseline. I'm glad we had that dialogue a second ago, Djibrane, because it brought my memory back in the day when we used to do a whole lot of on-site meetings, traveling all over the country. I did countless current state, future state whiteboards to understand every little component of a process so that we can start to realize potentially new data metrics that we can start to uncover and track as we move forward with a lot of these. Because again, right, those are proof points. Everything has to be backed with data, right? I mean, we can't go in with gut feels. I think it's extremely important to have data behind our metrics so that we can prove, exactly how these are in fact providing that return that we are hopefully expecting, right? And lastly, resource allocation, it really has a big negative connotation a lot of times. And I would strongly disagree in a lot of ways. I honestly see in this scenario that there is a very positive impact whenever it comes to resource allocation, whenever with automation, with finance automation, new tools, et cetera. Specifically, on the emotional side, from a personal standpoint, going back to some of those points that I mentioned at the very beginning, how awesome is it to potentially be home for dinner, with your family in the middle of close, right? And not have to work the 12-hour days. I mean, and have the awkward conversation that I personally have had, like, Chris, you're wearing the same clothes you were wearing yesterday. Did you sleep at the office? Yeah, I did. You know what I mean? So like, this is where we tie into a lot of the personal aspects of, that work-life balance, resource reallocation that ensures that everyone is satisfied with their job. When we have the satisfaction, we have additional benefits of, employee retention, savings on hiring, the list goes on. I can go on and on. But even more on the business side of things, strategically, now that we are freeing up more of that time, we can start to allocate these resources, conquering challenge one. Let's move on to challenge two, right? It starts to allow for us to reallocate those resources to continually find benefits and improvements across the organization. And every inch goes to the bottom line, right? So it's extremely powerful to realize those benefits and allocate those resources to continue improving around the organization. So I really wanted to come home with that one, Djibrane, on the negative versus positive connotation, because
Yeah.
I think there's a lot of really cool benefits that come from, on a personal aspect that I have personally seen in my own experience that brought a lot of joy to my life, for sure.
Yeah, and I think, the resource allocation as you talk through that, brings me back to, one of the organizations that I was working with previously, as they're going through an automation effort internally. I think one of the key things that they did is they brought everyone together kind of really early on, and what you saw at the end of the actual program is that you had a number of different employees of all ages that were really kind of invested, in the actual automation effort, became champions of it, helped to ensure its success, and then actually became key resources and subject matter experts when other automation efforts were coming across, right?
Mhm.
So it may have started with the finance function, but all of a sudden, marketing or another team is going through it, and then they go and they say, hey Chris, you've gone through this process in the finance element. What are some of the key considerations, what are some of the key hardships that you faced, how can we avoid that, right? And so I think it both creates champions within your organization and helps to upskill people within your organization to more collectively serve the whole and the purpose, right? Which is
Absolutely.
really interesting to see.
For sure. A big experience boost for sure.
Oh yeah.
Mhm.
And I know we've got a few minutes left. As we talk through some of the benefits, and maybe we'll close out, Chris, just talking through some tips and best practices as we go. Also wanted to invite all of our participants. Please feel free to send through some questions through the chat. We'll save some time at the end. Please don't be shy. Send those through, and we're happy to answer those. I mean, we've talked through some of the challenges, and I think, we've talked through some of the benefits as we've gone through, right? Everything from like cost savings and ROI, ability to reallocate resources and future-proof your organization. I think, Chris, you just touched on this one, the time savings to really focus on what matters most, right, for a business, which is, its clients and the organization. But as you go through, any other kind of tips or best practices that you would really kind of emphasize to any of the participants that are looking through, doesn't matter what stage in the process they are, maybe they're very early on, they're kind of partway through, but any tips or best practices from your own experience that you would kind of leave everyone with as we close out?
Yeah, I think taking, for lack, I don't know why this is the first term that came to my mind, but like taking the bull by the horn, by the horns here. And this is an extremely powerful experience that you can go through, obviously for your own personal brand. Whenever you're talking about yourself, in going through these processes and driving processes, process efficiencies, these are things that can really help you individually in learning these processes inside and out and how to make them better and improve those. And I mean, that's always something that's going to be extremely beneficial in helping you grow and strive, for great things in the organization as you grow. So I think that those are really good things to think about, how this can impact, obviously the organization, but yourself too. And so I think that it helps everyone involved. But whenever we're gathering all of these, it is a team effort. I think it always comes down to making sure I always like to use that round table analogy because these types of processes don't just affect us in finance. In fact, like, there's benefits in PayEm, for example, that yeah, we receive help on the finance side with additional controls and more processes, et cetera. But we're also having satisfaction in the part of our employees that are requesting, spend through our platform with our intake capabilities. It's allowing for the entire organization to realize benefit as a result of a solution that we implemented for finance, right? And so this is where we're starting to cross-functionally benefit the entire organization. And so I think, again, having all of the heads of state, or whatever the analogy you want to make, you want to use, involved in these conversations is very powerful. Obviously, if you're the change agent to get that process implemented, get that tool implemented, would be certainly powerful to have all those stakeholders involved for sure.
Yeah. Yeah, and I think adding to that in terms of, some of the best practices or tips I would leave everyone with, I think that's key. It's try to get everyone's support and everyone around the table early on. Invest the
Mhm.
time early on to be able to get that support. Invest the time early on to get a clear understanding of what your vision is, what your desired outcome is. Take the time to plan, and then as you go through, really put in place the metrics and things like that to really be able to evaluate. And I think secondly, as you touched on, Chris, is to really think about your return. Think of it more as a journey as you're going through the process, and really think about your return more holistically, right? Both from the tangibles, from an investment and return perspective, but also taking into account, different time frames and some of the many intangible benefits that you can see from there. But maybe I'll stop there, Chris. I see that we have a few questions coming through. Um, first question: are there any financial processes that you would recommend not to automate? What are your thoughts on that, Chris?
That's a tough one for sure. That's a good question. So,
And I
I'm
think this
stuck
one is,
for a second.
yeah, I think this is a great question. And I think for me, I would say, very much depends on I see it much more as like a internal. It depends on like from a context perspective, right?
Mhm.
Like what are your processes, and taking a look back. I would almost bring that back to that upfront conversation that you're having, across within the organization, right? Um,
Mhm.
Having a look at what exactly it is that you're doing, like doing like a current state, what it is exactly what you're doing, where the pain points are, and then focusing on automating those things up front and first where you can derive the most benefits. I think for different organizations there may be certain processes that you have right now where the processes themselves may not require automation at this point. It can kind of be deprioritized on that list. So I would say it's almost organization specific, process specific. But I do think that automation in general across everything from like invoice to cash, as we said, procure to pay, I do think there's huge opportunities within the finance function for that element.
Yeah, and I'll even thanks for giving me some time to ponder my thoughts there. But I obviously think that there's like some low-hanging fruit that, is obviously things that can be automated and streamlined, that return a lot of benefit. Obviously, OCR technology to easily extract data from your invoices and input those into the proper fields. But I think whenever it comes to a lot of like the analysis and the strategy side, there's certainly a lot of huge human element to a lot of those components of the platform. And so might not necessarily lend nicely to automation because, of course, we want to be aware of, different factors of the organization that are occurring, macroeconomic issues, those types of things, et cetera. So I think it's really important that, we do incorporate the automation to alleviate the potential for human error, right? Talking about a lot of that human element of things. Like I've spoken to countless customers that are processing, thousands of invoices a month manually. And think about the potential for error there. Those are certain things that can be automated. But when it comes to, the analytics of understanding, a lot of those KPIs that we were talking about earlier, certainly scenarios where, the stakeholders can have a very, direct impact into analyzing that data.
Yeah, certainly, but definitely a great question around that one. I think there's a lot of opportunities there too, and I think it's as you're going through taking that time up front to really understand current state, what are some of the pain points and things like that. It'll kind of help give a clear indication of where you want to prioritize within your organization and how that kind of fits more broadly with your own tech stack. Second question here, Chris. Any insight into how effectively to map out contingency strategies to mitigate risks associated with finance automation projects? So really being able upfront to think through some of the contingency strategies and elements to help with those downstream risks.
Yeah, I think a lot of that has been discussed too today. What Gibran was talking about, wishing a lot of those people wishing that they had done more due diligence in the beginning, right? Making sure that we've done our analysis, done our due diligence, and analyzed and uncovered the appropriate KPIs. I think a lot of times we want to hurry up and get through the sales cycle. We want to hurry up and make our decision. And I certainly know, you're analyzing different softwares, you're spending time with one, they all kind of blend together. I totally can sympathize with that. But I think that when you can start to slow down a little bit on that front end of the process to fact gather and analyze all of the necessary KPIs and potential direction that you want to go so that you can have a clear direction and a clear baseline, pays significant dividends to alleviate a lot of the risk of, churning on a software. Maybe it wasn't the right decision. Maybe there was some unforeseen things that we didn't uncover because we didn't really spend enough time and due diligence on the front end. So I think that that's one of my main points that I would come to the table with, is just really analyzing a lot of these components that we've talked about today in our discussion.
Yeah, I couldn't agree more. And I know we're approaching close to time. As we close out the conversation, we want to make sure that we continue it offline as well. Hopefully, you've everyone here's seen some value. If you're thinking, earlier on in your automation process or you're in the middle of it, hopefully you've got some keen insights here. Following the actual webinar, we will also be sharing a recording via email. So that way, we'll be sharing it with all of the participants, so you can also share it within your network. To continue the conversation, if you have any questions, feel free to connect with either Chris or I on LinkedIn. If you have any follow-up questions or want to continue the conversations there. And if you also are interested in kind of further exploring, automation efforts and how Kolleno and PayEm can help, please feel free to connect with us as well and go from there. But thank you all for taking the time. Thank you all for joining. Chris, thank you so much for all of the great insights shared. Look forward to continuing the conversation with further webinar events as we go forward. And as I said, let's keep the discussion going. If you have any questions, feel free to reach out. Thank you,
Thanks, everyone. I
everyone.
really enjoyed the time.